Hey everyone, welcome back. Ready for another deep dive?
Definitely.
So it's this English learning podcast called Daily Money Briefing.
Huh. Interesting. Okay.
It's actually pretty cool. You get the
Yeah.
financial news and kind of a language lesson all in one.
Oh, I like that. Sort of killing two birds with one stone.
Exactly. Today we're looking at a fascinating trio of economic stories unfolding across the globe.
That's right. We've got South Korea dealing with some, well, shifts in its job market.
And new rules for rentals too, right?
Exactly. And then over in the U.S., some pretty significant moves in the stock market after recent political developments.
So our goal here really is to cut through the noise, try and understand the core changes and, what they might actually mean for people.
It's interesting how these things, seemingly separate, can kind of shine a light on bigger economic pressures, the ones affecting individuals.
Okay, so let's start with South Korea then. This employment report shows a clear trend, doesn't it?
It does. Fewer new jobs being created. What is it now? 7 straight quarters?
7 straight quarter decline, yeah. And we're also seeing more people losing their jobs involuntarily.
And what about that ultra short-term work?
Oh, right. That's surged. It's at an all-time high. And get this, self-employment, fallen below 20% of the workforce.
Below 20%. Wow, that's a first.
Yeah. And just to put some numbers on the new hire decline, Q2 last year, down 149,000.
Okay.
Q3 down another 108,000, and then Q4 down 7,000. All year-over-year comparisons.
So this sustained drop in new hires, plus the rise in involuntary losses, it really points towards maybe a weakening labor market.
Seems like it.
And the boom in ultra short-term work, well, that suggests things are getting less stable, maybe. Less secure employment.
And fewer people going into self-employment.
Way.
Well, what do you make of that? Usually that's kind of a buffer, isn't it?
It could mean there's just less opportunity, or maybe it's just harder now to, start your own thing.
The report connects this to younger people, too, saying they might be delaying graduation or being pickier about jobs.
You have to wonder what the long-term ripple effects of that could be on the workforce there.
Okay, let's shift gears a bit. It's still in South Korea, but looking at the rental market, big change happening.
Ah, yes, the reporting system. The grace period is over now, right?
Yeah.
Since June 1st.
Exactly. So now, if you've got a rental contract, new or renewed, with a deposit over 60 million won,
Which is a decent chunk of change.
right? If the monthly rent is over 300,000 won, you've got 30 days to report it.
And if you don't?
Fines. Could be anywhere from 20,000 up to 300,000 won.
So, more transparency. But they mentioned compliance was already pretty high.
Yeah, almost 96% last year, apparently. They also say the digital system, the RTMS, is better now, making it easier.
So if we sort of zoom out this extra data collection, it could be really valuable for policymakers, couldn't it? Like for tackling housing affordability.
You'd think so. More information usually helps.
But it does make you, the listener, wonder, how might this extra transparency eventually shape rental prices or the whole housing market dynamic?
Good question. Okay, let's jump across the Pacific. The U.S. stock market.
Right, the first 100 days of what's being termed the second Trump administration.
And the numbers, well, they're quite something. S&P 500 down 8.66%.
8.66%. That's a hefty drop for that initial period.
Apparently, it's the fifth biggest decline in modern history for a new administration's start. Worse than the '08 crisis dip, or even early 2020.
Wow. And the NASDAQ, tech stocks.
Even steeper, down 11.5%. Worst since the dot-com bust for that index in a similar time frame.
And the reasons cited are mostly tariffs and uncertainty.
Yeah, widespread tariffs, rising policy uncertainty, leading to a sell-off across different assets, not just stocks.
Well, that kind of market reaction, it definitely reflects investor worries, concerns about, economic growth, company profits.
Makes sense.
And when you see a broad sell-off like that, it signals a general unease. The NASDAQ getting hit particularly hard might mean investors are especially worried about tech and growth companies under these policies.
So beyond just the tariffs, what other policy uncertainties might be spooking investors, you think?
That's the million-dollar question. It could be regulatory changes, geopolitical stances, fiscal policy, lots of moving parts.
Okay, so let's try and tie these threads together. We've got these job market shifts in South Korea.
Changes in security, self-employment dropping.
Then the increased regulation in the rental market.
More oversight there.
And then this pretty significant stock market volatility over in the U.S.
Yeah, it really feels like individuals are caught in a period of, considerable economic adjustment, maybe uncertainty.
Precisely. The job trends in Korea, the market swings in the U.S. They both really highlight this economic uncertainty that hits people's finances directly.
And even the new rental rules in Korea, while maybe good for transparency, they still mean new things individuals have to do, new obligations.
That just shows how connected everything is, right?
Mm,
Global forces, national policies, it all creates this complex landscape we're all trying to navigate.
absolutely. Which leads us to a final thought, perhaps, for you listening.
Yeah.
When you see all these interconnected pressures, jobs, how might you need to perhaps proactively adjust your own financial plans? Or even your career expectations in this constantly shifting global picture?
Definitely something to chew on. Thanks for taking this deep dive with us.